Good morning, YouTube. Hey, just at the start, I'm not an accountant. I'm not a financial advisor. I'm just a guy who does some stuff. And this morning, I want to share with you something I learned going into the details of the American Opportunity Credit for my own kids and on my tax return. My tax return is complicated. It's like 128 pages because of all the things you see that I do. And I'm going to go into one particular decision that you can make that a lot of people don't know is the decision. And I'm going to show you first what is said by most of the tax consultants. And then second, I'm going to show you the IRS presentation, which shows you what your options are. And then we'll go through exactly the numbers that I did on our taxes and decisions I had to make. So let's get into this. So the thing we're going to talk about here in particular is American Opportunity Credit. If you can read this right here, it says, can I claim the American Opportunity Credit if I get scholarships? Okay. For example, if you have a grant or scholarships that fully cover all your tuition, fees, and books, then can I claim the Opportunity Credit if you don't get it paid? You can't claim the American Opportunity Credit because you didn't actually pay qualifications. Definitive, right? You can't claim it. So if your son has $5,000 expenses and you have $5,000 scholarships, you cannot claim the tax credit. Now, credit is money against your taxes. So $2,000 of this, the first $2,000 is actually credit versus taxes, like they're giving you money. Okay, it's not a deduction; it's a credit, so it's worth $2,000. Okay, there's income limitations and things. You have to make under 160, married couple. It phases out to 160 and 180. But this is definitively telling you you cannot take this. Now, let's look at what the IRS presentation on the IRS website says. Okay, so first, here is the American Opportunity Credit. It is 100% of the first $2,000. It is a tax credit, not deduction, which is way better. 25% of the next $2,000, up to a maximum of $2,500 per child. So if you have 2 children, it's $5,000 in credit, which is immense. Now, it'll say the amounts are refundable and things. You don't have if you don't have taxes that you're paying, and those things you need to be aware of, those boundaries of your income. It is based on QTRE, which is qualified tuition expenses. I don't even know if this is right because that's actually not what we'll see later. I'll show you this in just a second. But definitively, if your child has scholarships, paying for education, you can't claim it. That's what the site said. Now, let's go down here a little farther. This is the other credit, which is lifetime learning credit, which is much less, like only 20% of the first 10,000. There's some different restrictions. You have to pick which one that you want. American Opportunity Credit, if you can take it, is much better in most circumstances. But you come down here, and let's look at this real quickly on the IRS website. So now, flip back to this, TurboTax, and your tax software, what it's telling you. Now, let's flip back to what the IRS website says. Alright, Pell Grants and many other scholarships can be treated in one of two ways for tax purposes. Excluded from child income if used for tuition or related expenses. So your child gets an education, a scholarship for $5,000, uses it to pay for tuition. It is not taxable for the child. Or did the tax software say this? No. Or included in the student's income. Okay? In that case, the scholarship does not reduce the amount of tuition and related expenses used to claim the American Opportunity Credit. So let me give you an example. You have $5,000 in education expenses. You have $5,000 in scholarships. You cannot claim the $2,000 tax credit. However, if you take $2,000 of those, you claim them on your student's tax return. Now you only have $3,000 in non-taxable income, and you just created $2,000 minus whatever the tax rate is on those $2,000 on the student's income. So you have some taxes there, but most kids are not in a tax bracket cost very much, 10 and 15%. And so your net there could be 85% of $2,000, or we'll say $1,700, $1,800 just for that one change that they said was not possible. Now, I'll show you how this works out for me. And so here's my kids' college. Now, what they said was not this number. Qualified higher education expenses, that is what it's based on the IRS website. And so that is tuition and books. You can scroll up my page right here. QHEE, okay? Now you take off of that tuition-free, tax-free assistance, which this is scholarships, and it leaves you an amount that you can qualify for the higher educational expenses, for the tax credit. Now, as you can see, for Joseph here, we qualified this amount of money, which comes to a credit of essentially the $2,000, right? Like we talked about, the first $2,000, and then 20% of the next $1,263. Now, so qualified for $2,252. Now, the maximum credit is $2,500. So I left the difference on the table here because I already filed my son's taxes. I could have got another $247. Refiling it minus whatever his tax bracket was, which I don't know if this income is considered earned income or not. Let's say it's 15%. So basically, if I refiled his taxes and took this year, then I'd get, let's say, 80, maybe at least 85% of 247. So for me, that would have been $210 extra money, just free and clear, right? Now you come down here to my son Jonathan. He is transferred at a four-year university, which costs more, tuition-free assistance, and here's the amount that we use to qualify for the higher education expense for the tax credit with $2,000, and then for him, we have money over, and we pulled money out of an education IRA based on the overage from this claim of American Opportunity Credit. So his is all optimized. Now, when you go to the state of Arkansas, the way that they claim the deduction, which I have above here, is completely different. The way they figure educational expenses differences can be very complicated to figure out. But Arkansas, for instance, is tuition only, and then you have to run kind of their formula through right here, and and then it tells you how much deduction is. It's 50% deduction, not credit. Okay, so much better to focus on optimizing this federal credit with American Opportunity Credit than it is on the state, because the state's just a deduction, and a $4,800 deduction with the 5% tax is several $100s, but not as high as a $2,500 credit here and a $2,500 credit here. So I decided not to refile his taxes for the $210 that we already got additional. But I did want to make a video and show you guys this trick, we'll say. I've not seen anything out there on this on YouTube when I was searching, and I hope it benefits you, and have a great day. I'll talk to you later.